All right, traders, before I celebrate one of the greatest weeks I've had in trading of 2022, I am going to show you the unique price action scalping trading strategies that we are using within Trader Society to consistently make money in the stock market. I'm going to show you how to get in right before the trend reverses so you can get the best entry. I'm going to show you how to identify the overall trend in the backside of the move. I'm going to show you how to consistently make money using these price action strategies. I'm telling you, it works, man. And I'm going to put you on into it. And I'm going to show you how, even though I didn't post a YouTube video, in 6 days, the levels that I gave out worked 100% perfectly. And I used those levels that I planned out a week in advance. And I ended up getting the best entry possibles for calls and for puts. And this has been one of my best weeks trading possible. In terms of the results, I had one portfolio that was up over 60K. That was the TDA one. And then I had another portfolio with a Webull. It's up over 126%. I want to give a big honorable mention to Ewos. This guy has been absolutely crushing it, man. He's been giving out great value, great text commentary, great trading plans within the SPY and SPX floor. For those of you who are new to Trader Society, this is where the money is made. This is the best place to be, the SPY and the SPX floor. There is no other chat server like this. This is the best place you can be, is that SPY floor and the voice channel. Next week, these two are going to be on fire. So with that being said, I want to give a big shout out to Ewells for an honorable mention. He's absolutely killing it, man. I also want to give a big shout out to Tanka Shop. She's been killing it within the SPY server. And G-Roar went crazy on holding put options today. I actually had a guy, and for those of you who don't know, if you don't know my full story, I have to make a video about that. But, in 2020, I lost a lot of money. In 2020, I blew up my account. It was over 400K, and I went through a lot of traumatic things in my personal life. It was very, very dark times, very dark story. And this is one of the people who followed me during my life crisis, during like the toughest time of my life. And he ended up joining Trader Society, and he watched my downfall, and he believed in me. And he ended up turning $5,000 into $35,000 today. It's absolutely insane what he has done, man. It's crazy. He bought puts exactly where I bought, which was at the top today at the previous closing price towards that 419.50, and he held them to close, and he turned 5K into 35K. He made almost 100 times the cost of the program already. And it's not just him. We got people getting results. I'm telling you, man. And it's like the same people. It's the same people, man. It's the same people that are just consistently getting results. So I'm going to show you how to do this. I'm going to walk you through it right now. We're going to go over the trades, and we're going to go over the strategies. We're going to get straight into it. So let's get into it here. So let's break it down. I'm going to show you, let's go over the first trade here. So the first trade was SPY puts. I'm going to recap today's trades, and then later this weekend, I'm going to do more of a recap of the overall week. I didn't post this week. I was very busy trading, very focused on that, and within Trader Society, and just working on a lot of things behind the scenes and playing behind the scenes, guys. But let's get into it. Why did I decide to buy puts at 9:42 a.m.? So remember, my style, I'm a scalper. I get in, I get out. I like to time it perfectly. I like to get the best entries. So the way I reward that behavior is to go with closer expirations, and I get in and I get out, and I scalp like a sniper. I don't hold very long. Now I have another strategy where I do hold longer, but those are the best setups, the best prices. That's a different strategy. I'm going to be talking about scalping like a sniper, right? So why did I decide to buy puts at 9:42 a.m., right? And then why did I decide to sell those puts at 9:51 a.m.? And I'm going to walk you through all the trades because I got in puts 2 more times after that, another time later on. I bought the dip on calls at 415. It rocketed to 420. I had one guy make over 17K within 5 minutes on that call out. But let's get into it. Why did I decide to buy puts right here on this oval at 9:41 a.m.? The reason why is, let's discuss the daily chart. As I told you, and my legacy will live on, I may have not posted a video, but the levels that I gave out worked. So the levels that I gave out was, if 420 cracks, play the puts. It's going to get crushed. Unfortunately, SPY gap down, so I didn't want to chase puts. But in terms of best setups at best prices, like I said, 420. If 420 cracks and reacts as a resistance level, you're going to want to play puts. Well, guess what? Today was the opportunity. It hit 420. It reacted as a resistance. You play the puts. And I'm going to show you how to determine that. I also said, if 420 cracks, the best price to buy calls is at 411.35. I bought those calls at 411.35, and I made a 40% win. And I've been killing it. In terms of my trading this week, there has been almost 40 scalps on SPY. I made almost 40 trades on SPY. These were quick scalps like a sniper. These weren't the best setups at the best prices. Some of them were. I'm going to show you how to trade the best setups at the best prices in these videos. Some of these were just scalps, just very quick scalps, nothing special, but very nice returns. But I'm going to show you how to trade the best setups at the best prices in this video. So why 420? What's with this 420 level? Why do we want to buy puts at 420? There's a gap to fill on SPY at 420. If it fills the gap and it breaks down and it forms resistance and it forms lower highs and it does not form support, it is going to be extremely bearish. because the next gap to fill below is at 411.35. That's why I said next best price for call is 411.35 for the gap close reversal. And SPY doesn't have a lot of support. So if a key support level of a nice whole round number of 420 cracks with big downside potential and a gap to fill below, then you're going to want to play puts. But unfortunately, in terms of getting the best entries, there wasn't an opportunity because it gapped down already. But that opportunity struck today. In that video that I posted in my last YouTube short, literally said if 420 cracks and reacts as a resistance, buy puts. So if you did not buy puts when the previous closing price reacted as a resistance level right here and formed a lower high, if you did not buy puts when it already crashed and had an overreaction to the upside, then formed the bearish candlestick at the previous closing price and the lower highs like I did again, if you didn't buy puts there, I just don't understand. I just don't understand. Are you watching the videos? I'm just not understanding. Another reason on why to so strongly buy puts was the 30-minute time frame. So one thing that I've recently added to my time frame was the 30-minute chart. The 30-minute chart is going to help you in terms of giving you direction on where the next 30 minutes is heading. That's what it's going to do. And we had someone point this out in the chat in the pre-market. They said, SPY's forming a bearish gravestone doji. I literally, I saw his username. It was like Noah's something. He posted it within the chat. And if you look at the 30-minute chart, this is the most bearish trend reversal candlestick you can possibly get at a key resistance level. And it can be found on any time frame. So it's important to watch all the time frames, right? So what I'm telling you is if the SPY is at a key resistance level where there's a key gap to fill, this gap never technically filled. Today's the day where it filled at 420. There was a gap to fill. It never technically filled because it just gapped down, right? Big downside potential. It bottomed at 411.35, had a gap close reversal, rocketed back up to fill the gap at 420. Once it filled that gap at 420, what did the SPY do? It formed the most bearish trend reversal candlestick on the 30-minute chart, which means the next 30 minutes should be bearish, right? And that's why I played puts. I literally played puts at 9:41 a.m. That was the reason why, due to all the reasons that I just gave you. See how everything I'm doing is stacking the charts. I'm stacking the charts in my favor. Multiple time frames, multiple candlesticks, multiple patterns, but I'm trading the chart. That is what it is that I'm doing. I'm not trading indicators. I'm not trading news. When the Palau speech was going down, I wasn't listening. I was seeing how people were reacting to that. And there was so much opportunity in those overreactions. So that's why I bought puts. I bought puts here, and then I sold into the dip. I sold perfectly at 951. I sold literally at the low. And then what did I do after that? What was my second scalp after that? The scalp was literally perfect. It was a perfect entry. It was a perfect exit. It was a classic gap close reversal. There was a gap to fill 420. It reacted as a resistance level. It formed the bearish candlesticks. It formed the lower highs. And then I sold into the dip into the first green candle. What did I decide to do after that? That was the first trade this morning to the scalp. This is the second trade. The second trade was at 10:01 a.m. I alerted puts. 418 strike this time instead of 419. And I got in at $2.11. I sold those puts at 10:02 a.m. Just 1 minute later. I sold them for over 60% return in one single minute. Why did I decide to buy puts again? Well, let me walk you through this. There was a doji at 9:57 a.m., which is very bearish. It's at key resistance. SPY is already selling off. It's consolidating. So I bought the puts literally on top, right as soon as 10 a.m. closed. As soon as 10 a.m. closed on this pullback, I said this is extremely bearish. It's consistently forming lower highs. It's forming the dojis. I'm going to try puts again right here. This is a nice red candle that I'm going to want to take advantage of. And that's exactly what I did. And within those 2 minutes, I ended up making a 60% return. If I would have held one more minute, it would have been a 120% plus return, right? If I'm scalping like a sniper and I could time something perfectly and get the best entries and I'm not holding very long, what I'm going to do is I'm going to go to close expiration and I'm going to stay too close. I'm barely out of the money. So if SPY's at 419.50, I'm going with 419 puts. If SPY's at 418.50, I'm going with 418 puts, right? So barely out of the money. That's what I'm doing, right? Basically the closest strike to out of the money, the closest strike that can be out of the money, basically. Now, there's a little more to it than that, but in terms of the exit, I exited literally just 1 minute later. The reason why I sold so quickly is just because I was up so much. That's the reason why I was just up so much and I wanted to get out. And like I tell you guys, if there's a big sell-off and then SPY starts forming green candles, just lock in your profits, play it safe and get out, rinse and repeat, right? So that was trade 2. Now let's go into trade 3. This is the trade that made someone 17K in a couple minutes. And this is the same guy who ended up making like 9,000, actually more gravy. Yeah, more gravy within the chat. He made over like 9,000 before this in the past couple days. This was SPY calls. This was the insane trade. I bought calls at 10:05 a.m. and it was a 416 strike and I got filled at 177. This was round 3. And then I ended up selling those calls 3 minutes later for a 43% win. Man, if I would have held those calls just a couple more minutes, it would have been 120% return. But like I said, these returns are insane for me. These are insane returns. I'm very happy with it. I'm scalping like a sniper. I'm not looking to hold these very, very long. But with that being said, why did I buy calls at 10:05 a.m.? What was the reason behind that? Why did I decide to buy calls on the exact low of this 1 minute candle, right? So in terms of entry for puts, I bought puts here. I bought puts here, and then I sold very quickly into dips, sold very quickly into dips. Why did I decide to buy calls right here, right? So the reason why is I was looking at the 30-minute chart. And this is something that I've added to my trading. And I was studying the 30-minute chart, and I was saying, man, there's just so much support. There's just so much wicks at this 414.70 to 415 level. And SPY recently, just yesterday for the micro, was breaking above it. It rocketed to new highs to 419.40. It even went to 421. If we can see some sort of overreaction, so this is called now overreaction. So what I want you to understand is, in terms of the first strategy that I teach you, that's called a gap close reversal. That's the best setup at the best price. You know, there was a gap to fill at 420. SPY formed the gravestone doji on the 30-minute. SPY formed the lower highs, and it had a nice sell-off. The gap close reversal strategy worked, right? There was a gap close reversal, and then SPY started to fill the gap. There was a gap to fill below at 413.67, right? So that's like the best strategy. Now, what I'm showing you here, this is just price action. This is just candlesticks, and this is just price action. This is a little bit for more advanced people, and I wouldn't say this is 100% the best set of those prices, but I'm gonna explain to you why I like this. 415 and 414.70 is a very strong supply zone, and when you're doing this, you want to focus on the micro levels. SPY just went from 414.70 all the way to 421. So if it just rapidly flash crashes from 421 to 414.70 and it starts forming green candles at 415, I'm going to look to try a 416 call strike. That's what I'm going to be looking to doing because it's a high probability trade. And the example that I would say here and what type of strategy this would be an overreaction. SPY has a massive sell-off very, very quickly. It forms a nice bullish trend reversal candlestick on the 1 minute chart, which is why I entered here. I entered as soon as this 1 minute candlestick closed because it was a bullish trend reversal chart. And I used the 30-minute chart to identify that 414.70 to 415 was solid support with huge upside potential. This was recently going from 415 all the way to 421. So odds are it's probably going to bounce here the first time because this is an overreaction. Keyword, overreaction. Profit is made in overreactions. Overreaction to the downside, look for the trend reversal at 415, ride it back up a little bit. And that's exactly what I did. I literally sold my calls on the first red candle, making a 43% gain. And if I were just to hold one more minute, this was the news and everything that was going on, those calls would have went up another like 100%. Absolutely insane. But again, I have no regrets on selling too soon, right? So that's what I do. I scalp like a sniper. Now, that's not the best setup at the best price. That's just another type of like price action strategy that I'm showing you. The gap close reversals are the best one. So what did I decide to do on my fourth trade? I did the same exact trade I did the first 2 times. I identified this is an overreaction. The trend is already likely bearish because we already sold off from 415 very early in the morning. So I did the same thing. So I sold my calls at 10:08 a.m. and then right here, at 10:11 a.m., I alerted puts at 140 with a 418 strike. That was my third put option at the previous closing price, at the key resistance level, at the gap close reversal 420 level, at 4:11 a.m. Why did I buy puts right here? I'm looking at the 1 minute candle. I'm saying, this is an overreaction, and this is a bullish trend reversal candlestick. And the 30-minute shows that we just went from 414.70 to 415 all the way to 421. So it's likely going to have a bounce with the overreaction. As you know, in terms of the morning, it can be very directional. Instead of a one-sided overall trend, SPY can flip-flop a lot, especially if it's having key reactions. I say that all the time. SPY can have key reversals at around 10 a.m. with an overreaction. The overreaction was right before 10 a.m. and then the reversal was at 10 a.m. Nailed calls. Now the puts, I recognize this candlestick at support is bullish and it had a trend reversal. This candlestick is the same candlestick where it recently just had a trend reversal, except it's bearish now. It's a red candle. It's at the best price at the previous closing price. It's at the best level for puts. I already took the trade twice on puts and nailed it. So let's go for round 3. Why would it even be potentially better on round 3? Because overreactions. SPY is correcting itself. The overall trend was likely to be bearish because it turned the previous closing price. This is why the overall trend was likely to be bearish today. It turned the previous closing price into a resistance level. That previous closing price was at a key resistance level of 420. We recently just cracked 420 and dropped all the way to 411s. It's just wild how SPY never filled the gap at 420, and then when it filled this gap at 411.35, it has a reversal, and then when it filled this gap at 420, it has another reversal, and then shows its true colors of how it's overall bearish, because this blew through 420 with a gap down like it was nothing. The overall trend was already bearish, and all these confirmations in the morning, especially past this like 10:20, 10:30 a.m., really started to confirm that. So that's the reason why I decided to play puts for the 3rd time within the first 30 minutes of the market open. And all of those puts were entered at the previous closing price with the bearish confirmations. I bought the puts at 10:11 a.m. because overreaction to the upside, bearish trend reversal candlestick, previous closing prices confirmed resistance. We already had a hard sell-off. If you look at the daily chart, we blew through 420 like it was nothing, and it bottomed in the 411s. Huge downside potential. And then I sold those puts very, very quickly for a 25% win. It is what it is. Now what I'm going to do is I'm going to walk you through some patterns and some trends. This is going to help you out a lot as well. So what I want you to understand is, why can the overall trend be bearish on SPY? Let me walk you through this. This is why. There was a gap to fill at 420. SPY never filled the gap. It had a gap down, and then it bottomed out at this lower gap at 411.35. Best price I said to buy calls. It had a reversal once it filled the gap. We call that a gap close reversal. You can use the strategy both ways. Once it had a gap close reversal, and I'm using candlesticks to confirm. I'm using support, candlesticks, charts, pattern recognition, multiple timeframes to confirm if the bullish or bearish confirmation is there at these key gap levels or key support and resistance levels. So anyways, it closed this gap, rocketed back up to 420. Once it hit 420, it reacted as a resistance. And that's super bearish because, like I told you guys, if 420 reacts as a resistance, SPY gets crushed because there's a gap to fill below. And if you look right here, there was a new gap waiting to fill below at 413.67. So you better believe history is going to repeat itself and SPY is going to sell off massively. And this is just a situation where it never tested this 420 support. It just blew through it, closed the gap, had a reversal, retested previous support, and you know on the retest of that previous support, if it reacts bearish, then SPY is still super bearish. It happens all the time where stocks crack key support levels, they drop, they pop back up to key support levels on the daily, on the intraday chart, and then they form lower highs, turn into resistance. And if you see that occur, you need to be saying, wow, this is the best confirmation we could have gotten all week for put options at the previous closing price. You know, you don't want to be like, it gap down, I'm going to chase puts. Again, there's ways to do that. In terms of these videos, I'm trying to show you guys the best things to do. Out of those 40 trades, probably like 5 to 10 of them were the best setups at the best prices, and the others were just pure scalps. It worked, and I'm making money doing it, but I'm really trying to show you guys the best way to be doing this within these videos. It gets a lot more complex. You know, within the Discord, that's where you can learn a lot more about everything that we're doing. But I'm just really trying to expose you guys to the best setups at the best prices, especially for those of you with small accounts. You need to do what's best for your portfolio. But that's why the overall trend was bearish. This is simply why. There was a gap to fill at 420, SPY gap down. It never filled the gap. It bottomed out at 411.35, had a gap close reversal. SPY went back up to fill the gap, which is normal. It's very normal for a reversal to occur and for a stock or for SPY to go back to the previous support level on the daily, which was 420, and there was still a gap to fill 420. So if it closes that gap and forms resistance, SPY is going to be extremely bearish. How do you confirm that it's going to be extremely bearish? You use the candlesticks. And also, this just sold off from 410s. It was simply previous support turning into resistance. 420 support simply turning into resistance today. This was the opportunity to buy puts and not chase puts. This was the opportunity to get in at the best price. This is where you should be most confident. And like I said, Fridays tend to be my best days, and this truly was the best day. And in terms of bearish confirmations, it's all within the candlesticks. This 30-minute it does not get more bearish than this. If you see this gravestone doji, this is what it looks like at key resistance. It's going to collapse, right? And overreactions, again, just overreactions. This is why the trades were so good. 411.35 to 420 is an overreaction. Previous support reacted as a resistance. It was a special gap waiting to fill at 420, gap close reversal, sold off even harder. It makes perfect sense. There was also a gap to fill below at 413.67. If that cracks, SPY falls off another cliff to go to 408 and also to go to 406. We discussed this all in the live stream on the bearish case, on the bearish possibilities. I also played puts at 410. When it was at 410.50, I played puts, made an 80% return. And I did end up scalping. I scalped like 2 calls against the trend, and I lost on those. They weren't big losses compared to the wins, but I did scalp against the trend. I paid the price. And one reason why I made those mistakes is, and this is going to be a key for me moving forward, I've noticed when I'm trading, I trade the best in terms of reading the chart and reading the price action. I do it best on the TD Ameritrade mobile app. This app right here, this is what I trade best on. I'm going to show you what it looks like. This app right here, for whatever reason, it's called the TD Ameritrade mobile app. That's what I do best on in terms of reading the chart, reading the price action, trading the best setups at the best prices, trading price action, scalping. In terms of trading, I trade best on my phone using the TD Ameritrade mobile app. I started trading when I was in middle school, and then I took it very, very seriously when I was in high school, and I didn't have access to a computer while I was in school, and I completely punted school, just basically didn't do any work and completely ignored it, and I went all in on trading, and I was able to do that on my phone. My teachers didn't care that I was on my phone all day, and I was able to do that. And I put in tens of thousands of hours into this one single app. And I've noticed I have a special flow state in terms of reading prices and reading price action using this app. Now, I'm going to say this in terms of executing the trades, using an app is not the best way. A best way to execute your trades is to use buttons. And these buttons need to be custom limit orders on your contract, where if you click the button, you will get filled no matter what. I'm not talking about buying above. I'm not talking about buying at the ask or selling at the bid. That's not good enough, because if if the candle flips within seconds, you might not get filled, even though you submitted your sell at the bid and your buy at the ask. I'm talking about a custom limit order button where all you have to do is type in the amount of contracts you have. And then when you click that button, whether SPY goes up or down, or no matter how high it goes up or down, within the moment you click that button, you will get filled instantly. It's a custom order that fills you to the nearest price possible on the bid when selling and on the ask when buying, right? That's the difference. People were talking about this button on the app where you can buy at the ask and sell at the bid. The problem with that is SPY might flip in price within a second. And it can literally, I've been in trades where it reverses within the second because I know exactly where to get out perfectly. Like for example, if I had puts right here. Let's say I held right here and I submitted an order to sell at the bid, and SPY just instantly spikes up as soon as I submit the order. Boom, I don't get filled. And then I might hold it a bit longer, and then I get trapped and get back all the profits, and then it turns into a big red trade. That's if you're buying, that's if you buy the ask and sell the bid. Now you can use this custom limit order to fill at the nearest price on the bid when you're selling, and to fill at the nearest price on the ask when you're buying. And it automatically fills you. No matter what SPY does, it'll automatically fill you the moment you click the button. It's fucking crazy. And there's nothing like that. And Webull is the one who offers it. They don't offer that feature on the phone. They just have regular buttons on the phone where you can buy and sell and stuff like that. And you don't want to use market orders. But that's what I found to be the best. And the one that has it is Webull. And another thing with scalping like a sniper is you need to understand, if you are trading cheap contracts, if you are trading a lot of contracts, the keyword is very cheap contracts and a lot of contracts. If it's one of the two or both, you need to understand commissions are very, very expensive. If you are scalping in and out, it is very expensive. They add up very, very quickly, especially if you're doing the margin and you're scalping a lot above 25K, best way to do it. It adds up a lot of money. And with Webull, the commissions are free and nobody's doing that. That's why I like Webull more, because of the custom feature they have and because, of the custom feature and the free commissions. That is why. I've tried TOS. They work great too, and you can set up great things with them, but it's not as good as Webull in my opinion. And I'm not sponsored by Webull. I don't need any money from them. I'm not sponsored by them. There is no affiliate link. I'm just sharing with you guys what I think, what's working best in my experience. I have multiple portfolios for multiple different strategies. I have a portfolio that is solely dedicated just to scalping SPY. All it does is scalp SPY. It's a margin account. It's got to be a margin account above 25K in terms of the strategy that I'm using. And all it does is scalp SPY. And then I have another portfolio. This is better for a smaller account, but I do it with a large account. It's trading the best setups at the best prices. Every single week, there's like 2 to 3 amazing trades that come around. It could be on SPY, it could be on stocks. That portfolio, all I do is trade the best setups at the best prices. And then I have another portfolio where I just scalp the SPY. And it doesn't have to be the best price. It doesn't have to be the best setup. It's just a laser scalp in and out. And that's all I do is scalp SPY. If you were to sit here and scalp SPY, literally, you don't have to hold puts all day. If you think people holding puts all day are banking, you'd be surprised what you can do on a same day expiration if you are getting near perfect entries, selling in on the rips, buying puts on a bearish overall trend like this, and then selling into the dips and just rinse and repeating and compounding. You can actually make a lot more money scalping than holding. That's just the reality of the situation. Obviously, on a bearish trend like this, you preferably want to be holding. But, there's going to be a lot of days where we're choppy and the people holding are going to get clapped. And it's very hard in certain days to determine if we should hold or if we should chop. It's not an exact science. Nothing works 100% of the time. But one thing that can work all the time is just to say, I'm going to scalp like a sniper. If I leave some profit on the table, I get back in at the best price and just rinse and repeat. And I can compound my account. All these people holding are stuck in the trade and it can go against them and they can get back a lot of profits. Or it could be a choppy day. So I'd much rather just consistently scalp the trend at the best prices, the puts on the key levels for rips. Now, I'm going to show you another phenomenal opportunity to buy puts, and this is something I want to bring awareness. Now, this is just price action. This isn't like some sort of special strategy. This is just price action. The special strategy was the gap close reversal at 420, best setup at the best price, and the gap close reversal at 411.35. Now, I'm going to show you some price action. With price action, I want you to write this down. Key levels, key support levels, big upside. Key resistance levels, big downside. I want you to write down that. And I want you to write down overreactions. There's so much opportunity in scalping with overreactions, right? So I explained to you why the trend was likely to overall be bearish. And what I want to do is I want to show you another opportunity for puts, right? Now, this isn't at the best price, but for the time being, if you were to rebuy puts here, if you were to add to puts, this would be a phenomenal opportunity to do so. And I'm going to explain to you why. So SPY recently gapped down from 420. It bottomed at 411.35. Big sell-off. If you look right here, it bottomed at 415 support from yesterday. Key support, big upside potential, ran to 420. Topped at the previous closing price for like the third time. Formed lower highs, very bearish. Now, this is what I want you to understand. I explained to you why the overall trend was likely to be bearish. And now what I'm going to do is I'm going to show you another opportunity for a snipe, for a nice little scalp. This is key support. It went from 415 to 420 in 5 singular minutes, right? That's huge upside potential. So what I want you to understand is if a key support level with a huge upside potential level cracks and reacts as a resistance level, SPY is going to sell off. And you might be wondering, well, how do we measure price action? How low can this go? You do that by using the daily charts. You also do that by looking at the overreaction. If this just bounced from 415 to 420, spiking 5 points in a couple minutes, you better believe if 415 cracks like it did here and forms lower highs, resistance, more lower highs, that instead of that 5-point move to the upside, it's going to have that 5-point move to the downside. Obviously, for a scalper, I'm not aiming that big, but you just have to understand on why it would be so smart to re-enter puts if 415 cracks. The reason why is it went from 415 to 420. 5 points of upside very, very quickly, overreaction. So if it cracks 415 and turns it into resistance and forms lower highs, instead of the big upside 5-point move, what are you going to have? Well, if you measure the price action, you're going to have a big 5-point downside move. You see, that's how I read the price action. That's how I read the game. That's how I read the charts. What's another key level where the SPY put options can print like crazy? If this were to happen, you can do the same thing I just said right here. There was massive support at 411.35 and at the pre-market lows of 410.50. If you see that crack and react as a resistance, and I did take this trade, I made 80% on it, you buy the puts. And once it started to react right here, I played puts right here. Red bearish 30-minute candle. Look at this. This is where the 30-minute candle comes into play. The high of this 30-minute candle is at the low of this one. See how it's a bearish trend reversal candlestick? What happens? SPY sells off next 30 minutes. See how it's a red bearish trend reversal candlestick and it's lower and it's topping out at that key 410.50 where those lows were, where SPY went from 410.50 all the way to 420. Those are the new lower highs on the 30-minute. And history shows, this just showed, if this candlestick forms, what's going to happen? SPY's going to drop next 30 minutes. SPY's going to drop next 30 minutes. Do you see how that's identical? Do you see how this 30-minute candle is identical to this 30-minute candle? And then do you see how history then repeats itself, with another red bearish 30-minute candle, with another red bearish 30-minute candle? Do you see that? And it's just understanding. Looking at the charts, if 410.50 where literally SPY bottomed at. This is where it bottomed at 410.50 with massive upside potential. If that cracks and reacts as a resistance level, it's going to get absolutely crushed. And it's going to start filling the gaps. And there is a gap to fill right here at 408. And there's a gap to fill right here at 406. So in terms of identifying bearish trends, like I said, key support levels, big upside potential, when they crack and react as a resistance, play the puts. When you see a key gap fill level cracked and react as a resistance level, play the puts. You don't want to fully milk this though, and it's not as simple as this video. I'm just sharing with you some pointers. Obviously, if you were to just take things away from this video, the best thing to really take away is that previous closing price strategy, the gap close reversal strategy. Also, a great key takeaway would be key support level, overreaction, big upside. If it cracks and reacts as a resistance, and I explain to you why the trend was overall bearish, meaning you're going to want to definitely play puts if the trend's overall bearish. Once 415 cracks, turns previous support into resistance, forms lower highs, then SPY has a big, massive sell-off instead of a big, massive pump like it did here. So it's just understanding how simple price action works and what can occur at these levels. Another trade you could have said was right here. I'm going to point this one out. And you can consistently do this, man. You can just keep on doing this. Now, not all trades are created equal with size. If I see the best setup at the best price at 420, I'm automatically sized bigger no matter what. And then I'll scale back down in the account a little bit. But let's go into this, right? This is another key level. There was a gap to fill at 413.67. So if SPY fills the gap and it reacts as a resistance level and it forms lower highs, buy the puts. So we're going to draw a line right here. I'm showing you all the examples, man. It's all within these candles. And you could use these candles on the 1 minute time frame, the 5 minute time frame, the 30-minute time frame. Look for trends. Look for patterns. So right here, this is where it filled the gap. It cracked, just like it cracked 415. It bounced back up, form resistance, bearish trend reversal candlestick, lower highs. Buy the puts, sell into the dip. 411.35 was another key gap fill level. It did the same thing. 410.50 was another key gap fill level. It did the same thing. It reacted bearish the whole entire day, and this was a very good live stream on Voice and on the Discord that we had with Trader Society. And like I said, this was a life-changing day for a select group of people who really went hard with scalping, or who just held puts. I have 2 people so far that have told me they've made over $35,000 today, and they were not trading with a bunch of money. They were trading like 5-10K. So yeah, that's the strategy. I hope that helps. I hope that makes sense. That's literally how you do it, guys. Some closing notes. I'm gonna say this. If you have a cash account, you got to trade the best setups at the best prices. And I explained to you what that is with the overreactions, with the gap close reversals, right? That's what you got to do. You got to trade the best prices at the best setups. If you're under 25K, I'd recommend you use a cash account. I would not use a margin account. You're going to be limited to 3 trades over a 5-day rolling period. I would use a cash account if you are under 25K. And if you're probably wondering how much should I be sizing in, if you are a beginner, I would size in at 10%. Once you are proven and to be more experienced and more successful, I would size in at 20%. Some side notes. If you size in 10% per trade, you can make 10 trades a day, because if you're doing 10% of your account per trade, that means that your cash will be completely used up on your 10th trade, right? Because 10 times 10 is 100%. All your cash will be used and it settles the next day. If you trade less, then I would do 20%. If you're trading less, then do 20%, but make sure that you're experienced and you're already profitable first. You shouldn't be sizing in bigger at first. Now, depending on how little you're starting with, you might have to size in 20% at first, and you might not be able to scale in. So obviously, there is extreme disadvantages to using a cash account and to using a small account. For some people, for beginners, it's going to be good for them to be on training wheels. It's going to prevent them from losing a lot of money very, very quickly. But if you are an experienced trader, and no matter what, The best way to possibly trade is with a margin account above 25K. And I completely understand not everybody has that opportunity, but within time, you can get there with, by growing a small account, trading the best setups at the best prices, not entering a bunch of scalps like every single way I'm doing. I'm gonna have it separate. I'm gonna have a channel for best setups at best prices, and then I'm gonna have a channel just for my scalps for more of like larger accounts. But by creating sources of income for yourself, not just in the stock market, but with outside the market, side hustles, job, like other things like that, other avenues, business, stuff like that. So yeah, I'm just gonna leave it off at that because have been working on a new strategy where I'm just scalping SPY, meaning I'm not trading the best setup at the best price. I'm scalping SPY at specific levels with specific confirmations, purely trading the chart, the price action, stuff like that. I wouldn't say it's the best setup at the best price, and it's working phenomenally. Do I believe that's the best thing to do? I don't, but I believe if you're trading with the trend and you're buying puts towards, key support levels that have now cracked and reacted as a resistance with big downside potential, I believe it's a great opportunity for puts if you are trading that trend. So the keyword with this strategy would be trend focused. It would be more focusing on the trend rather than the trend reversal. That's the best thing I could really say about this strategy is you would really want to focus on trading the trend with this whole scalping strategy. And the trend is a lot easier to identify later into the day because the first 30 minutes can be very flip-floppy. And then in terms of the best setups to the best prices, those can be more of trend reversals. Those could be more trend reversals. They can also be trend trading trades at key levels, and those typically come around a couple times a week, like 2 to 3 times a week. Now, in terms of this scalping, situation I'm looking at, if we've identified the trend as bearish, I showed you many examples. You could scalp puts multiple times at 419.50 previous closing price. You can scalp puts when 415 reacts as a resistance. You can scalp puts when the 413.67 gap reacts as a resistance. You can scalp puts when 411.35 gap reacts as a resistance. You can scalp puts when 410.50 pre-market lows on August 24th reacts as a resistance. You can scalp puts. You see what I'm saying? Like, you can buy these puts at key levels on the rips where the previous support was now turned into lower highs and resistance, and you could just keep on banking instead of holding. And if you were to do it compounding, I'm sorry, if you were to do this compounding, and you were going crazy on same day expirations, this is the type of strategy on one good day with a margin account above 25K. It is more than possible to turn $30,000 into $300,000 plus. It is more than possible to 10x an account, consistently scalping SPY at key levels on an overall trend day like this. The keyword is trend day like this. So those are the pointers. Those are the things that I want to recommend. And just one last time, how to determine that the trend was bearish. SPY sold off hard from 420, a gap down. It had an overreaction to the upside, 411.35 to 420, so it's due for a pullback because it's an overreaction. It turned the key 420 in the previous closing price, the gap fill level right here, into a resistance level on the pre-market with the bearish 30-minute trend reversal candlestick, right here. This was key. And then it had an overreaction selling off to 415, instantly ripped back up, and then it formed a bearish trend reversal candlestick on the 1 minute chart, which is a very bearish confirmation right here. I mean, look at what happened when this candle was green. SPY rocketed 5 points. Look what happened when this candle was red at key resistance. SPY crashed 5 points. And then 415, big support, big upside. If it cracks and reacts as a resistance, scalp puts, another key level. There was a gap to fill. My gaps and my previous closing prices are always key levels. Bottom strong wicks, always key levels. Overreactions, always key levels. 413.67, there's a gap to fill. If it cracks, reacts as a resistance, scalp the puts. And then 410.50, if it cracks and reacts as a resistance, then you're going to want to scalp the puts into those lower highs. All key big downside potentials with gaps to fill below. So in terms of bearish trends, just understand, if it's consistently turning key support into a resistance level, forming those lower highs, the trend is overall bearish. The trend can begin to flip if SPY hits a key support level and it starts breaking above the lower highs and forming higher support. That's when you could see a strong flip, which is something that SPY practically didn't do once today. It did it like a couple times, like right here, it tried to do it, but it just couldn't do it. It just couldn't maintain it. So yeah, that's the thoughts, that's the analysis. If you do want to use this weekend to study, there's so much content. There's over 100 There's over like almost 100 hours of content within Trader Society, the private video lesson library that is going to show you everything it is that I know about the stock market. It is going to show you all the unique price action strategies. It is going to show you how to identify the key levels, right? So just to give you some examples, looking at the daily chart, 420. There's a gap at 420. It's at a key level with big downside potential. If it cracks, SPY tanks, it starts to fill the gap. And then this is a key oversold level where if SPY bounces, it's going to start to rocket back up and then fill the gap at 420. And then if it rockets back to 420, that's SPY saying, it just sold off massively. It's due for a move back up to previous support. If previous support reacts as a resistance, then the overall trend is going to be bearish, which it did. And then it went back crashing down to fill the gap below at 413.67. So if you want to learn how to master trading at key specific levels for trend reversals, how to trade the overall trend, how to scalp like a sniper where you don't have to sit here and hold this every day, I'm telling you, holding may look attractive on a day like this, but you need to understand, just look at the daily chart, man. These are like once in a lifetime opportunities. How many times does SPY do this a year? Your answers are on the chart. How many times does SPY close weak at the lows every single year? All your answers are in the chart. There's been several days where SPY's been choppy this year. If my mindset were I'm just going to scalp, I don't have to determine if I need to hold or not. I could just scalp. Like, it's just so simple. And then if the trend's overall bearish, overall bullish, I could keep scalping the trend. And while everybody's holding and hoping, I can compound my scalps and make even bigger returns. And I could do same day expirations and make even bigger percentage returns. You see what I'm saying? A lot of these people holding, they're not putting a lot of money into same day expirations. Why? Because that's high risk. That's so high risk to put a lot of money into hold a same day expiration. Now it's okay to put, a portion, maybe 10% of your portfolio into a same day expiration and scalp it quickly for like 20, 30, 40, 50, 100% in and out within minutes. It's okay to do that. But I'd much rather be in that situation where I can consistently scalp. I don't have to hold for a certain move. I get in, I get out, I trade like it's water, like I'm flowing like water in the flow state. I'd rather trade that way. Holding is extremely stressful. And you need to understand the way I'm trading these same day expirations, I will make bigger percentage returns than these people who are holding fully in a lot of situations. If we were to compare like the overall results on the day, and I can get back in and get back out, there's no stress. And it's scalping like a sniper, and it's compounding rapid fire. Even a scalper can beat someone holding on a day like this. It's possible. If they're compounding and doing same day expirations on rips and selling into dips consistently, they can easily beat someone who bought a same day expiration put, which is unheard of, and held it all the way till the close. Extremely hard to do at a big position size. So yeah, those are just things I want to bring awareness to and how I make up for my lack of holding. I make up for my lack of holding by getting the best entries and going with short-term expirations. And I can consistently get back in and trade the trend, and I can consistently compound those trades while that one person is just holding that one singular position. So yeah, I just want to bring some awareness to that, man. I'm telling you, scalping is the way. Scalping like a sniper, man. So yeah. If you want to join Trader Society, it's going to be the first link down below in the description. You get access to the unique price action trading strategy that we are using to consistently make money within the stock market. I will show you how to master the long side, how to buy calls. I will show you how to master the short side, how to buy puts. I will show you how to trade the best setups at the best prices. I will show you how to scalp like a sniper. You do also get access to the Discord server. I don't have too much time to go over everything. It's all explained in the first link in the description below. If you do want to sign up and get started this week and start studying, the Discord server, the money-making floor, is on the SPY floor. This is where the best of scalps are alerted. And then the will alert section, this is where I alert my best setups at my best prices. Watch list, this is where I share my trade ideas, my updated price action analysis in real time, my stock analysis. I take questions and Q&As within the trading floor on stocks you're watching and questions you have about the SPY as well. And there's a lot to it, man. We have a great community. We have a select group of traders who are absolutely crushing it consistently, and they can help assist you as well. So you get access to that networking platform and the opportunities within the Discord in terms of the real-time trade alerts, the real-time scalp alerts, the real-time price action analysis, and you can get your questions answered. You do also get access to, and this is very important when it comes to scalping a position. So in order for a scalp to be alerted real time, where it's alerted in real time, it needs to be live. It needs to be live as if you and me were on the phone, right? 100% real time. If I were to text you in a chat room or over the phone, I would have to write the text message. You would have to receive the text message. You would have to read the text message, and the scalp might already have played out. These same expirations on SPY can be moving 10% a minute. 10% a minute. Yes, a same day expiration on SPY can be moving 10% a minute with decent volatility, and then further into the day as theta decay kicks in, they could be moving 20% plus a minute, especially into power hour, right? The returns are absolutely insane if you know what you're doing. It truly is a game of mathematics and risk management, position size. So one way we figured out a solution to alert a trade real time is we're going to be using the voice channel. I will be live on voice, preparing my scalps in advance and calling it out in real time on the voice, as if you and I were on a phone call, right? No delay in a text alert, no delay in a live stream. This is 100% live voice, as if you and me were over the phone. You can ask me questions on here as well. So you get access to that. And you get access to the video lesson library. That's going to teach you the strategies. It's going to teach you how to master price action. It's going to teach you how to trade like a sniper. It's going to teach you how to trade the best steps, the best price as well. It's going to teach you risk management and position sizing. Options is a way to minimize your risk. Options can make or break your account. If you know what you were doing, you would never trade a stock again. You would only want to trade a stock if you had millions or tens of millions of dollars in your portfolio. Then it would make sense to not just trade options, but to also trade some shares. But if you minimize your risk with options, it could be your best friend. And I'm going to show you how to do that through risk management and through understanding mathematics. You can be very profitable with options on a win rate as low as 25%. It's definitely possible with these same day expirations. I can get in on a same day expiration, lose 20% in a couple minutes, get stopped out, lose 20% in a couple minutes, get stopped out, lose 20% in a couple minutes, size in a little bit bigger on the next one, on the fourth one. And the reason why is I never really lose 2 times in a row. It's very rare for me. Sometimes it occurs, but I'll scale up a little bit in size on same days. I'll do it. I'll scale up a little bit in size if I'm on a 2 losing streak, and then I'll make a bigger return and make it all back simply. Like I'm telling, there's a game to this, man. There's certain plays, understanding volatility, understanding what contracts to select, understanding the potential of the move, a potential in the play, in the momentum, understanding the potential in the trend. It's insane what you can do scalping these expirations. And again, it doesn't have to be same day. You could do a 2-day expiration. That's completely fine. Same days are extremely volatile, and you have to be very professional to be trading them as well. But it works with 2-day expirations as well. It's just the returns are going to be less, but the contracts are going to be more, and they are safer to technically hold longer. So there you go. You could size in a little bit bigger on those as well. It's just I've found a way where, like, with my strategy, if I can time it perfectly, right? If I could time something perfectly and I can get the best entry, I would want to go with something that's going to make me the biggest percentage return. But there is a lot more risk doing that as well if it goes against you. So it's understanding you don't want to size in too big, and balance is good as well. You can find a good balance between a 1 to 2 day expiration, because even if you can snipe and time things perfectly and get the best entries, you can easily get stopped out. That's where another thing, scaling, can come in and stuff like that. But if you hold too long, it can turn into a big loss. So I do believe in balance. I do believe in balance of like a 1 to 2 day expiration. But in certain trades, I think it's very logical, and I think it makes sense to trade a same day expiration and to put in 10% of the portfolio, or maybe if I'm feeling very confident, 20% of the portfolio. You don't want to put in too much of the portfolio in a same day expiration, and you don't want to hold a same day expiration very long. Whether it's a win or a loss, you do not want to hold it very long. They're meant to be scalped like a sniper. The point is, I can make a much bigger percentage return than someone who holds for a much longer period of time because of my perfect entry, my perfect timing, and the strike price and the expiration that I've selected. It's just the reality of the situation. So I understand my advantages in the market, and those advantages that I have in the market with timing perfectly and getting phenomenal entries and being spot on aligns with my contract selection, with my expiration, with my strike price. It's all aligned to the way that I trade. If my mindset were to hold a longer period of time, I wouldn't be doing same day expirations. I would be doing something a lot differently. I'd be doing a 2-day expiration. That's what I would be doing, a 2 to 3 day expiration. But in terms of strike price, the strike prices are always the same. I always stay basically the closest strike to out of the money. I do not want to go far out of the money. At most, I want to go like 30 to 50 cents out of the money. If it's too far out, then I stay in the money. So yeah, I'm gonna leave it off at that. If you want to join Trader Society, it's gonna be the first link down below in the description. I am gonna use some time now to enjoy this weekend. Over the weekend, there's probably gonna be 1 to 2 more videos. There's just so much to recap, man. I mean, I recapped about 4 trades this week. I made nearly 40. But in terms of the ones that I recapped today, those are the best ones at the best prices. In terms of other trades that I made this week, it was that 411.35 gap. That was the best setup at the best price. That was the best one, right? And And then there was just a lot of scalps. There's just a lot of scalps that you can do with a margin account. If you're above 25K, it's not the best thing to be doing, but if you know how to do it, it's just, I don't want to leave that money on the table and I don't want to hold very long. So I'll get back in. It's not a problem. I'll get back in. And I'm always going to size bigger on the best setups at the best prices for sure. That's where I'm putting the bigger size in, of course. So yeah, I'm gonna leave it off at that, man. If you want to join Trader Sites, first link down below the description. I will see you guys within the next video. I'll also see you live at Market Open on a Monday.